Hi, this is the Business Guy, and today we're diving into one of the most powerful ways to save money on taxes while making a smart investment: solar energy. Whether you're a homeowner, a business owner, or a high income earner looking to invest in solar projects, this video will walk you through everything that you need to know to take advantage of solar tax deductions. We're going step by step with real examples, strategies, and actionable tips. So by the end of this video, you'll know exactly how to reduce your tax bill, build wealth, and even make money with solar. And since this isn't tax advice, be sure to review your situation with an experienced CPA before taking action, and ask them how you can save an incredible amount on taxes by investing in solar. So subscribe to my channel right now if you haven't, and let's jump in. So first, let's talk about why solar is such a game changer. Did you know the US government offers some of the most generous incentives for solar energy? The key thing is they want to encourage it, and since it only really makes sense economically with extra tax incentives, they want to make sure that it's worth your while. So they offer some of the most generous incentives for solar energy in the world. So here's why it's such a great investment. Federal Solar Tax Credit, or ITC. And as of now, you can deduct 30% of your total solar installation cost from your federal taxes. For example, if you spend $30,000 investing in solar panels, you could reduce your tax bill by $9,000. Now here's the amazing part. If you do this as a business, you can write off 80% of your investments. Say you owe $300,000 in tax and invest just $375,000 on some project that you own or co-own somewhere in the country. Even if you finance part of the $375,000, you can wipe out your tax bill. We'll talk more about that in a bit. State and local incentives. Many states offer rebates, property tax exemptions, or even no sales tax on solar equipment. I'll also give you some examples of that in just a minute. Depreciation for business. Now, business owners can write off the cost of solar systems over time using accelerated depreciation, energy independence, and savings. Solar systems can reduce or even eliminate your electrical bill. Over 25 years, the average homeowner saves $25,000 to $40,000. Investing in solar projects for income and tax benefits. For high net worth or high earning individuals, investing in large-scale solar projects can generate both passive income and significant tax deductions. Positive environmental impact. Every solar system reduces greenhouse gas emissions, making it a win for the planet. So whether you're motivated by tax savings, long-term ROI, or sustainability, solar is a smart move. How the solar tax credit works. So let's get into the nitty-gritty of the Federal Solar Investment Tax Credit, or ITC. This is a big one, so pay close attention. The tax credit allows you to deduct 30% of the cost of installing a solar energy system from your federal taxes. Now, there's no cap, meaning whether you spend $10,000 or $1 million, you can claim 30%. Now, here's how it works. If you install a system that costs $50,000, you can take a $15,000 tax credit directly off your tax bill. Now notice, this is not a deduction, it's an actual credit, meaning it reduces your tax liability dollar for dollar. For example, let's say you owe $20,000 in taxes this year. With a $15,000 solar tax credit, you only owe $5,000. And if you don't use the full credit, you can roll that over into next year or previous years. Qualifications for the solar tax credit. To qualify for the credit, you'll need to meet these requirements. You must own the system. If you lease the system, you can't claim the credit. The company leasing it to you gets the credit. Installed on eligible property. First, we'll talk about putting the solar on your home, and then later, we'll talk about investing larger amounts in solar projects. So for your home, this can be your primary home, secondary home, or even an investment property in the U.S. Operational in the tax year. The system must be installed and producing energy in the year you're claiming the credit. So here's a fun fact. As we said, even if you finance the solar system with a loan, you can still claim the full credit. So let's talk about a step-by-step guide to claiming the credit. Here's how to claim it. Install the system. Work with a reputable solar installer and keep all receipts and contracts. Download IRS Form 5695, that's 5695, and this is where you calculate your solar tax credit. Fill out Part 1 for residential energy credits. Transfer it to Form 1040, and then take that number from Form 5695 and transfer it to Schedule 3 of your Form 1040. File the taxes. If you use tax software or work with an accountant, They'll handle the details. Solar for business. Now here's where it gets big and exciting if you have a high income. Solar gets even better thanks to the accelerated depreciation under the Modified Accelerated Cost Recovery System, or MACRS. So here's how it works. Businesses can depreciate 85% of the system cost over 5 years. In the first year, you can claim up to 80% as a bonus depreciation. For example, say your business installs a $100,000 solar system. The federal tax credit is $30,000. Depreciation year one, $68,000. So total tax savings in year one is over $50,000. Essentially, the government pays for a huge chunk of your system while you reap the benefits of lower energy costs. It's a win-win. Okay, investing in solar projects for high net worth individuals. Now let's talk about something for high net worth people. If you're looking to offset significant tax liabilities, investing in large-scale solar projects might be the answer. Now these projects can provide tax equity investments. It works like this. You partner with developers to fund solar farms. In return, you earn tax credits, deductions, and a share of the revenue from the energy produced. Passive income streams. These projects generate stable long-term income as solar energy is sold to the utility companies. Accelerated depreciation benefits. Like individual systems, solar farms qualify for the MACRS, offering huge write-offs in the early years. For example, imagine you invest $500,000 in a solar project. The federal tax credit, $150,000. Depreciation year one, $425,000. Energy revenue, $40,000 a year. So in just a few years, your initial investment is covered through tax savings and income. Here's another example. Let's say a high-income individual earns $1.5 million annually and owes a substantial amount in federal taxes. So they invest $2 million in a large-scale project. Federal tax credit, $600,000, or 30% of the investment. Accelerated depreciation, year one, $1.7 million. Tax liability offset between the tax credit and the depreciation. Their entire federal tax bill is reduced to zero while also generating income from the project. So this is how high net worth individuals use solar not only to save money in taxes, but also to build wealth. And keep in mind, because of the accelerated depreciation, there's a huge tax deduction that can offset prior year's taxes up to 3 years ago and future taxes. State incentives, the hidden gold mines. Most people don't realize how much money they can save with state and local incentives. Let's take a look at a few examples. California, for example, net metering allows homeowners to earn credits for excess energy sent back to the grid. In Florida, there's no state income tax, and a property tax exemption exists for solar installations. In New York, a 25% state tax credit up to $5,000 on top of the federal tax credit. You can find incentives in your state by visiting, that's DSIREUSA.org. And that stands for the Database of State Incentives for Renewables and Efficiency USA. Okay, let's take a look at the long-term ROI and track your savings. Solar is a long-term investment. So let's go ahead and break down the numbers. The initial investment, let's say $20,000. Federal credits, $6,000. State incentives, $2,000. Energy savings, about $1,200 a year. So in just 10 years, you've saved $18,000, and that's before accounting for the rising energy costs. Over 25 years, your total savings could exceed $40,000. So here's a success story from one of my clients. They invested in a solar farm development. The initial investment, $750,000. First year tax savings, over $300,000. Annual passive income, $80,000. So within 5 years, they reduced their investment and now enjoy a stable income stream while supporting renewable energy. So here's some final thoughts and action steps. Now that you have a blueprint for how to save big on taxes and make a smart investment in solar, to recap, take advantage of the 30% federal tax credit. Leverage state and local incentives. Maximize depreciation benefits for businesses and projects up to 85% of your investment. Track your ROI and enjoy the long-term savings. If you're ready to start, go ahead and contact a qualified solar installer or project developer. Gather your documents and talk to a CPA to make sure you get every penny that you're entitled to. If this video helped you, hit that like button and subscribe for more wealth building strategies. Got any questions? Drop them down in the comments below. I'd love to help. See you next time. This is The Business Guy.